If you own minerals in a good area, and let's say you own greater than 20 acres, right, you got a pretty freaking good idea what they're worth. The reality is that the market is way more liquid than it was back then, right? And we have a much firmer grasp of the resource in the ground and what it costs to extract it and what's going to get drilled and what's not going to get drilled and how much a well is going to produce, right? And what price we think we're going to be able to sell it for.
What's one mineral deal you'll never forget, and how much did you take?
The best deal that we did, I had a mentor that ran an oil and gas company. He was the VP of land of an oil and gas company based out of Denver. They were there at the beginning, and they leased over 1 million acres in this play. They had made hundreds of millions of dollars on this deal.
Stephen Hatcher, you're here today because you're a minerals guy. I'm a distressed real estate guy, so those are different, but all the real estate guys want to be mineral guys, and the mineral guys want to be real estate guys. And I wanted you to come on here and spend some time talking with me about minerals.
I love it, dude. Let's do it.
Good. Welcome. Well, I came across you from Instagram.
Yep.
Your reels popped up in my news feed, and that's how like so many people meet these days.
Yep.
But it was fascinating. And a real estate guy always has interest in minerals. So that's been fun. We chatted some here and there. But will you tell everybody out there who's listening, who's Stephen, where you're from, how'd you get here?
Yeah. First off, thanks for having me, man. I'm super pumped to be here. And I mean, I kind of live, eat, and breathe, oil and gas and mineral rights. And there's just so many parallels between what you do and what I do, and so I'm excited to kind of share a little, or give you guys a peek into my world. But no, so I'm originally from Louisiana. Grew up in a small town outside of Baton Rouge, and started my career in Shreveport.
You don't totally talk like a Louisiana guy.
No, I don't. I know.
You've been away long enough.
Well, it's funny because, people always tell me that. I guess where I came from was a little bit more country than it was Cajun, but my mom is a real Cajun. Like she's a Lesage from South Louisiana. She's a French Acadian. Grew up there, went to law school at LSU and started in private practice in Shreveport. And the reason I went up there is because this thing called the Haynesville Shale was kind of exploding at the time. And I went up there because they had a job and opportunity, and I just so happened to land at a firm that we focused on upstream oil and gas operations. Right, so when
you were in law school, did you want to go to the energy business?
Yeah, well, not necessarily, but some of the best grades that I got in law school were in property law. And so I was always kind of attracted to kind of how property flows, right, and reading property law cases and stuff like that, right? So it was really just it was really opportunity driven, I'd heard about this thing called the Haynesville. And I had a couple of buddies that were landmen that I'd gone to LSU with that had moved to Shreveport. And
we're making all this money.
Yeah, exactly. They're making more money than me at the time.
Yeah.
And so it was really kind of happenstance. And I went to work at the firm, and I totally just got ate up with it as soon as I started. And we would represent upstream oil and gas producers, so oil companies, right, that were seeking to drill wells into the Haynesville Shale in North Louisiana. And the very first project that I got at the firm was to draft a drilling title opinion, right, for, I think it was Indigo Minerals at the time. And basically, I got handed this abstract, right, which was it was probably, 15 or 20 bankers boxes full of deeds and mortgages. And they said, okay, tell us who owns what, right? So that's how I cut my teeth was chaining mineral title all the way from a patent, right, from the U.S. government or, it could have been, the French government,
That's an interesting point. I'm going to stop you real quick. Sorry, I don't want to interrupt. But with real estate title, we go from today backwards. And the way I understand mineral titles, you go from today backwards to patent and then forwards. Is that right?
Yeah. Well, it depends on what you're trying to do. If you're trying to build like a full title chain, for a property, like in oil and gas companies will do this. And it's like, well, why does an oil and gas company need a title opinion? It's like, well, they want to know if they're going to spend $15 million to drill a well, that they know who to pay. right?
Yeah.
And that they have oil and gas leases that cover the property, and they're not going to be committing a trespass by drilling the well.
Oh.
Right. So that's, so we like in a lot of cases today when I'm buying minerals, I do the same thing as you. I start because I'm trying to figure out if the seller that I'm talking to owns. So I will start by running their name, and then I will go backwards and try to find their source deed to those minerals.
Gotcha. So you're not running it from the land, you're running it from a person saying, I have a piece of information that attaches to the land. Let me follow that chain.
Bingo. Bingo.
Okay.
But yeah, I mean, I started doing full chains, right? So starting all the way from patent in the 1800s, and you learn the story of a family and a piece of land and a farm. And
that's pretty cool. It's fun.
Yeah, no, it was. And so, so I started my career doing that. And then I was in private practice for a few years and had a mentor that was running an oil and gas company. And he was like, you want to come work for me?
Wait, how long were you working for a firm before you went to private?
2 years. Yeah.
So within 2 years of working for the firm, you said, I'm going to go on my own.
Yeah.
Dude, there's a strong entrepreneurial streak in there.
100%.
Quick.
Yeah. It was, it wasn't fully entrepreneurial because I went, I basically went from being outside counsel to working in-house for an oil and gas operator, right?
Oh, okay.
So we were, I was just, at this point, I knew that I wanted to spend my career, in oil and gas. And I knew that I wanted to get away from like doing all the legal documents for a drilling deal and actually start doing the deals myself, right? And so it was awesome. And that company was based out of Louisiana and Colorado, and all the management was in Colorado, and they were like, well, do you want to move to Colorado? And that's how I ended up in Denver. So that's where I currently live, is in Denver.
So you're Louisiana, Colorado, those are 2 places you live mostly.
Yep, exactly. Okay. And so, working for that company, we were an exploration company. We drilled wells all over the country. And that was pretty freaking cool because it was, we would literally start from an idea, right? It would be geologists, either using seismic data or, their knowledge of regional and local geology to say.
Oh, that's high risk. That's like wildcatting almost.
100%.
Like,
yes.
Ooh.
It's exactly what it was.
So you win some, you lose some.
Yeah. No, believe me, it is, there is I definitely think oil and gas draws people that are a little bit, willing to take more risk. For sure. I mean, that's probably the understatement of the century.
Yeah. It's a high risk, high reward game. Lots of bankruptcies, lots of nasty litigation. It's a really special place.
It is. Yeah. No, it's special. I mean, you got to be willing to kind of ride the highs and lows. And believe me, it's like I went to that company in 2014, and basically prices cratered within 6 months of me being at that company.
Ooh.
And then they bottomed out in 2016. So, I've lived through that.
So I got laid off in 2016. I was building pipelines in the Texas oil fields.
Bingo.
And when that happens, that's why I have a little exposure, but it's from the construction side.
Yep.
And when that happened, it fell apart. So I guess I'm going to do real estate surface. So
yeah. But yeah, so that whole like prospect development, starting from an idea to sending landmen in the field, right, to determine mineral title, right, to buying grassroots oil and gas leases, to actually drilling wells, all the way through, payment of a royalty check to a mineral owner.
You're like dirt to door all the way.
Yeah, and I learned.
That's cool.
I
a lot of places do segments of that, but you guys doing the whole thing is like a huge education, and you're getting paid.
Yeah, bingo. Yeah, I mean, so I did that for 6 years, and then the whole world fell apart in 2020. And I partnered up with a guy who's my now partner, and we took over a distressed oil and gas company. And at that point, I had really kind of been buying minerals, for a while, and really started to grow the mineral rights acquisition portion of the business. And today we have an oil and gas operating company, and we operate, over 850 wells, all across the country.
Wow.
And we have a mineral rights business where we buy minerals in, the Utica Shale in Ohio to Southwest Pennsylvania to West Texas. We buy in East Texas, North Louisiana, really all over the country. There's no deal that I won't look at.
So when I ask myself what's happening here, because I'm trying to like connect dots real quickly, I feel like it sounds a lot like a real estate operator where we're looking for deals. Some deals we like and fit in our portfolio and we can afford them. Capitalization is right, all those things. Let's own this for certain reasons. Some of it, we can sell this and make a margin. Let's sell that. Is it the same thing with different asset?
It's the same exact thing,
Except y'all can't get easy financing.
Yeah, that's exactly right. Yeah. Well, we do in order to get typically in order to get a bank interested in an oil and gas deal, it's got to have some scale. So in our operating business, we have a great relationship with Frost Bank, so shout out to Texas.
Known for that.
And, so it's a different type of financing altogether, right? But when it comes to minerals, like most of, and until you achieve a certain scale, right, most of the time when we're modeling a mineral deal, right, we're assuming that it's unlevered, right? So we're not.
Are many of the deals with cash or raised cash, like your equity or raised money?
Yeah. So a lot of times, So a lot of times, what it is, well, let me. You guys will have to cut this, but so a lot of the deals with raised money. Yeah, so it really depends. If a deal fits my profile, just like you're talking about, it's the right size, I can get it for the right price, it's in the right area, I'll just buy the deal. But in a lot of cases, I have relationships with other buyers that want deals in specific areas. Mm-hmm. And so what I'll do is I'll bring in a partner and basically syndicate the deal. I'll either turn the entire deal to them, or I'll keep a piece of it, right? I'll either keep a commission or a carry in the deal.
Yeah.
And so that I can, my goal is to do as much volume of mineral transactions as I can, right? And at the end of the day, it's like taking cash is great, but if you really want to be able to build like a passive income stream, right, you want to make sure that you're getting exposure and you're owning a piece of everything that you touch.
It's identical to real estate, dude.
Yeah.
Identical.
Yeah.
Wow. So what multiples would that stuff trade at? Because we look at we don't look at it, but like on the low side, people are paying 5 caps. And we like to be at a 15 cap.
Yeah. Yeah. So it's different, so cap rates in, commercial real estate, the way that we think about it is you've got kind of a multiple of existing cash flow, right? So if an owner is receiving $2,000 a month, right, depending on the deal, we might be willing to give them 24 months of cash flow, or we might be willing to give them 60 months or 5 years.
Oh, but y'all have like a regressive curve, right?
Bingo.
Is that right?
Yeah.
So the apartment rents or warehouse rents go up 3-4% a year. Y'all's go down.
Yeah. When you think about, a well getting drilled, and the way that I explain it to, folks that I teach is that, the mineral development curve really kind of looks like a bell curve, right? So what'll happen is at the very top of the curve is when a property actually enters production, okay? So everything kind of on the left side of the curve, is when the property's undeveloped. And you will see appreciation of minerals that are undeveloped, right? And that appreciation is going to be driven by activity in the area, right? So if we think about
that activity proves this value because it's probably got the same resource.
Exactly. So leasing activity picks up, drilling activity in the area, right, all the way to drilling activity right next door.
So as an area starts to develop, people are writing leases, people are drilling, it's working. All of a
value
sudden,
goes
people's
up.
property went from this to that because we know it's here.
Bingo.
Huh.
But once a property enters production, right, so a well actually gets popped and it starts to flow, the value of that property basically is at its pinnacle, right? And it will start to decline because every oil and gas well in the world, it declines through time. It's a finite resource in the ground.
What's a typical length of a well? I know they vary across continents and types, but like, what are life cycles of some of these?
So I would say a modern. Well, here's the crazy thing: is that with modern horizontal shale wells, you're going to recoup anywhere between 60 and 80% of all the dollars that you will ever receive within the first 2 years.
Oh my gosh.
Yes.
So your curve is like this.
Boom. That's exactly right.
How are these people in the Eagle Ford making any money? I mean, they make all this money in the beginning and then it's done.
Yeah. So the way that
it's incredibly expensive to put this infrastructure and you got to make a ton of money up front.
Well, the way that you think about it is it's a very high IRR, so internal rate of return, right? Because you get those dollars back so fast.
Which is nice.
Versus real estate, right, where it might take you, 10, 20, 30 years to recoup your investment.
Okay.
Right. So that's I mean, believe me, the numbers work.
Yeah.
But in some cases they don't. But okay, so your first 2 years, you're going to get 80, call it 70% of all the total value you're going to get back in 2 years, and then what happens is that the decline curve will start to level out, right, and you will get some residual level of value for the next 10, 20, or 30 years.
Interesting. Okay. Wow. Yeah. So let me change to another sliver of this. So for folks that are doing this stuff with surface estate, we're buying and trading, ranches and houses and mobile homes or whatever, and they're doing a lot of land title abstracting. I know what they're thinking because I'm thinking it. Well, then how do I figure out how to find minerals and how do I figure out how to value them? So how do you do that?
Well, here's the thing that I tell everybody, okay? Minerals that never get developed are worth zero. They're worth nothing. Okay, so the first thing that you have to understand, it's all about where you're at and where you're located in relation to ongoing oil and gas activity. Okay, so if you're in an area that's within a shale basin, right, then you're in the right spot. Right, 95% of all drilling activity in the U.S. is directed to horizontal drilling in the shales. Okay. Now there may be older, conventional, straight hole production, in a given area where you could, potentially, you might be able to find a deal and get some cash flow that comes along with it from minerals. But, what everybody really needs to be thinking about is just because there are minerals associated with this property doesn't mean that they're worth a damn thing. Okay. It's really going to be highly dependent on where you're located.
Is that because if people aren't already working the area, they're not going to send a rig and people and all that stuff out just to drill that one well on that one property?
Yeah. So minerals are they like mineral rights are the most, and royalties are the most. This is what I say. They're the most OG form of passive income that there is, because they're fully passive, right? Unless you planned on spending, anywhere from.
Because you're getting a royalty. Someone does everything else.
Someone does
just get
everything. That's exactly right. And I get mineral owners all over the country that reach out to me all the time. They're like, how do I get somebody interested in drilling on my land? And it's like, well, it doesn't work like that. It's all directed by oil and gas companies. The oil and gas company has to say, we think there's oil under this property and we want to drill it, right? So,
there must be enough out there to send 2 rigs for 6 months and some crews and find some housing. That's a lot of work to do for one well.
Yeah.
So there's got to be enough for them to deploy it, I guess.
Yeah, no, that's exactly right. I mean, so minerals are passive, right? Because basically someone else is doing all the work. The oil company is going to do all the work, right? So there's not really a lot that mineral owners can do in order to entice somebody to come spend millions of dollars, unless they had a geologist on staff and, they could prove up and make it interesting, and there are a lot of large timber companies and large mineral owners that are sophisticated enough to be able to do that. But, so for everybody listening, it really is kind of highly dependent on where you are. But if you are in one of those areas, right, or areas of active oil and gas production, then you are doing yourself a disservice by not understanding mineral rights.
All right. So how does a guy that's doing surface estate stuff like we would right now, how does he do that?
Well, tell me where.
In a nutshell.
Yeah. So let's
go Eagle Ford.
Yeah,
South Texas.
Absolutely. So in South Texas, let's say that you're trading, ranch land or commercial real estate or whatever in specific counties in Texas that are prospective for the Eagle Ford Shale, right? What most people know, right, is that when you rip the tax rolls for surface, right, or tax parcel data from any one of 20 different websites, you know, especially in the state of Texas, that whoever owns that surface probably doesn't own minerals. Okay.
You believe that? Okay.
So the question becomes, it's like, all right, well, how do you find mineral ownership? Okay.
Yeah.
Well, mineral ownership basically in areas of active oil and gas development, right? The reason that there's a separate chain is that Farmer John reserved minerals back in 1920, right?
So you said reserve. So Farmer John said, I'm going to sell the ranch, but I'm going to save and accept or reserve the minerals. So the minerals stay with John or his heirs, and they travel down a
totally different chain.
Family path than the surface estate that's sold off.
Exactly. That's exactly right. And this is what landmen do.
And you're
right?
saying most times in Texas, they're probably severed. If you had to make a bet, that's what you'd bet.
I would bet that, yeah. I would bet that at least some portion of the mineral estate has been reserved, especially if you're talking about, areas like the Eagleford Shale.
That's because there's been so much activity, so much going on.
For such a long period of time. It's like Texas landowners got smart back in the early 1900s, right?
That's why you have such great property law, because they've been litigating the fuck out of it for like 100 years.
Exactly. So what you have to know, right, is unless you want to do the work in the courthouse to go back and find that split in the chain and then run that title forward from Farmer John and find all of his heirs, and you can absolutely do that. It's funny because you got guys over in the other room, right, that are basically landmen. They're just running out different chains, right? They're running the surface chain. So you can absolutely, get good at running mineral title. It's not rocket science, by any stretch.
Technique is very different concept, but similar technique to land.
Yeah, very, very. It's the same technique. It's just a different chain. But the way that I do it, right, is I will start with, basically there are repositories of mineral ownership information, that vary from state to state. So what I always try to do is try to find the cheat sheet, right? And I start with the cheat sheet, right? And then when I find somebody who's
what would the cheat sheet be? That would be like an appraisal district roll for a mineral estate that Logan Fullmer owns right now.
Bingo.
So you don't have to search around to find it and then head a direction.
That's exactly right. Yeah. And now I might get Logan Fullmer. If I get Logan Fullmer on the phone.
Logan doesn't really own a lot. I own a little minerals, but not much. So this ain't gonna happen. But
but let's say that you did. You own 500 acres of minerals in South Texas, right? I get a hold of you and I say, hey, Logan, I'm interested in making you an offer. Here's what I'd pay. At that point in time, if you're actually interested, I'm going to go back and confirm your title. Right. So then I'll go back to the courthouse to make sure that Logan owns what the tax rolls say that he owns.
That's where the opinion of title comes in. You're making your own opinion of title.
Yeah, no, that's exactly right. I mean, because the way that the tax rolls work in the state of Texas is all the oil and gas companies are required to report, basically what they paid to all these mineral owners, right, to each county. Right, so the decimal interest or the percentage interest, right, that's reflected, right, in that mineral tax roll data, right, basically comes directly from the oil company.
And that's probably from some of the better research you're going to get. So it's decent data.
Yeah, bingo, right? And so I know, having worked at an oil and gas company, that they had somebody that sat in a dark room with a little lamp that ran all that title.
Six banker boxes worth of title.
Exactly. So it's a really good place to start, and they're great. I mean, Texas is really, you guys love property tax, right?
Oh,
so, you make it easy on mineral buyers, right? And that's one of the reasons that Texas is more competitive than other states, because the data is so readily available.
Oh, that's an interesting point. So when we work in small counties that don't have online records, we hate it. If we have something that's like going and we need to deal with it, like someone gets in the car and goes out to that courthouse and researches the surface estate, because that's what we're trading. But there are a lot of counties that don't have records online. So there's some states, probably, similarly speaking, there are probably some states that have terrible records, so it's much tougher to do it. Whereas if everyone has access to the data from anywhere in the world in Texas, it can be hyper competitive.
Yeah, totally.
I had no idea.
Yeah, no, that's exactly right. And so let's go next door to Louisiana, right? So in Louisiana, where I'm from, there are no tax rolls.
Oh my God.
Yeah.
How do you get tax information?
Well, they have tax rolls for surface, but there are no mineral tax rolls. There are no
it's like the Wild West then.
Mineral owners are not paying. Well,
do they even pay?
Texans love property tax, right?
I love property tax because it creates delinquent property tax, which is my calling card.
I know. So
do people pay tax on minerals?
You don't pay tax on minerals in the state of Louisiana.
Wow.
Or in a lot of places. I think Texas is the exception.
Really? So ours would be slightly more devalued because of that extra expense, I guess. Are the taxes on minerals accurate? Like one of my buildings was valued at half of what it actually is. So I'm paying half the property tax annually because the appraisal district just didn't do a good job. How's that look for minerals?
No, it's funny. Well, no. I mean, I got a buddy that actually lives in San Antonio that's his entire business. That's what he does, is he goes and fights all these counties, right, for these large landowners, right, and oil and gas companies, and they're constantly fighting the appraised value of these properties.
Interesting.
Right, so shout out to Marshall Porterfield. I don't even know if he's going to listen to this, but yeah.
So they do a bad job valuing them.
Yeah, well, I don't know. I don't know if they do or they don't, but what I know that happens is if you've got large, sophisticated mineral owners, right, you can basically go back to the county just like you can with surface, and you can challenge their appraisal, right? And a lot of times, if you've got the data to back up your valuation, then the county will back down, and you'll get your tax bill will be less.
Gosh, this is like the same world but different. I almost feel like I'm in just like a slightly alternate world that.
Yeah,
this is the same, but just looks a little different.
It's a little different. I mean, the biggest difference between surface and minerals is how you value it. Okay, so kind of going back. I mean, like if you want to know what the value of a piece of real estate is, within a standard deviation, you go to Redfin or Zillow or
100%.
Whatever, and you can do that within 3 minutes, and you got a pretty good idea what that property's worth.
Power to a lot of people. It's very simple.
Yeah, exactly. Now with minerals, it's just more complicated than that, right?
You got to look at a curve. So how do you know the age of the well? Is that in one of the records? Is it accurate? How do you decide what this regressive production chart looks like?
So if you go back to and I'll have to send you an image of this of my mineral production curve, right? That you could just throw up on the screen. But if you think about like the value of mineral rights is not static. Right, it's not static and gradually appreciating at 4 or 5% like surface real estate. If a tract is unleased, it's on the fringe, right? It might be valued at a few $1,000s an acre, right? If it's in the core of the core, it's got 40 wells on it. It's going to have a totally different valuation, right? And then you also have to think about where that property is in the stage of development, right? So remember that minerals will appreciate, right, up until the point where they're drilled, right? So a lease happens, right? A well is...
So it goes from that other one that's a couple thousand an acre, and as activity comes, it starts to go up, but it's still undrilled. Value's going up. Once they start drilling, things start happening.
That's
now
exactly
you're at the peak of your value, and they drill. And then it starts production, and you have to start diminishing the asset.
Yeah. So minerals are valued based on 3 things: volume, price, and time. And this is what I teach all the folks in the course that I just launched. But so volume is the total volume of oil and gas hydrocarbons that could be produced from wells drilled on the property. Right. Price is the price of the commodity, so the price of oil and gas, right, which does this constantly. Mm-hmm. Right. So, God loved Trump, but man, he like we're like in the oil business, it's so funny because, you talk to anybody in the oil business and like they're just red-blooded Americans and they're like, we want Trump and drill, baby, drill. And then Trump gets in office, announces all these tariffs, and the price of oil goes down 15%. So,
like, what the heck is this?
Yeah. So oil prices are known for their volatility. Natural gas prices the same, right? So you got to be able to model the volume. Right, so the total amount of hydrocarbons, the price, and then the time component really gets down to when is the well going to get drilled, right? Mm-hmm. So as you get further up, this mineral development curve, a lease is granted. There's a drilling rig down the street. There's a permit issue on the property. Time starts to come into focus, right? And so you can pay more. Basically. So there's really a lot of different kind of variables that you have to consider when it comes to when it comes to minerals. Now, if you're just buying cash flowing minerals, like let's say all the wells that can be drilled have been drilled, right?
I like the lower risk of if it's cash flowing right now, I can see it. I can do this quick calculation and say, what's going to be my return on my spend?
Yep.
And I can know how to make a good offer that I feel good about that return today with zero risk, or I think zero risk, or less risk.
you still got price risk, right?
Volatility.
Because you got price volatility, right? Because you could, let's say that owner, right? All the wells have been drilled. That owner's making $2,000 a month. You offer him, let's say, what's 30 months? It's 60
grand.
60 grand, right? Or you offer him 80 grand, $75,000, and he's ready to trade. But that price that you offered on $2,000 a month is based on $75 oil, right? The price of oil goes to $60, right? Then all of a sudden, all your numbers just changed.
I guess your price goes down by a fifth or something.
Yeah, something like that. But there's so we're talking going back to cap rates, right?
Mm-hmm.
I mean, when you think about a fourplex in a great area, 4 cap, 6 cap. You say you like buying 15 cap properties.
Yeah, deal.
Right? Yeah. So, I mean, we really have like valuations in oil and gas are reflective of kind of the same dynamic, right? If you're in the core of the
better quality product, more production over here.
Exactly. Like
easier to drill. I don't know.
Like, so your 4 cap, oil and gas properties, might trade at what we call, a present value of between, 10 and 15%, which is an IRR, right?
Okay.
So it's a little bit.
Oh, that's a pretty good return though.
Yeah. But it's still, and if you, I don't know if there's a direct comparison between cap rates and IRRs, but I kind of seem to think like, if core of the core, really good stuff is trades between a 10 and 15% discount on present value to get to present value, right? As you get, as more factors come into play, like, there's a permit on the property, but it hasn't been drilled yet, or this property hasn't even been leased, you're going to be looking for, maybe a present value 20, right? Or a present value 30, right? So your discount rate goes up based on the relative risks associated with a particular piece of property.
Got it.
Right. So there is some similarities between commercial real estate and what I do because, a super distressed piece of property that needs a ton of work, right? You might be able to get it at 15 cap.
Does that even exist? Because this is such a competitive space. There's so much big money out there. Can you buy cheap? Unless if you're not like Pioneer who can drop $100 million on some operator who's failing, like I can't go buy that.
Yeah, no, there are definitely ways here's what I'll say is that if you can, the hardest part of the minerals business is finding the deal.
Oh, us too.
And the big boys are lazy. They want everything brought to them on a silver platter.
That's how it is here too.
So you know what I do? I find the deals and I bring it to them on a silver platter.
Got it.
So that's my business
and
model.
They'll pay a premium.
They'll pay a premium. And so what I capture is basically it's the arbitrage between, it's the value for
how cheap
finding
someone's
the
willing
deal.
to sell it and what they're willing to pay. The big boys.
That's exactly right. Yeah.
Okay, so earlier, I'm going to back up a little bit. You said when you left that company, where you were in-house counsel, I think, you went and bought an oil and gas company with a partner. That sounds like a huge undertaking. That sounds like something that would have been way ahead of you, and it was a big stretch.
Yeah,
like, that sounds huge. Can you tell me about it?
Yeah, so we didn't buy the company. Like basically, we partnered with a bank. Okay, that it was a private lender, and these guys are.
How do you know these people? From
it was just a relationship, and they needed help, and we said we're available. We'll help. It was at a time when I think oil prices went negative in April or May of 2020. So
we're jumping off like out of windows and stuff.
Yeah, it was crazy time. And these guys basically got left holding the bag, and a prior management team basically just threw the keys on the counter, and so we stepped in, and basically this was a public company. So we had to take the company private, like it was a massive undertaking. Talk about distress.
Yeah,
it was a trip, and so we got it. We got in there and we stabilized the asset, and that asset sold last year, and those guys have gone on, and then we've since went out and started a totally separate operating business, and we've got The guys that backed us are out of Austin and Dallas, and they're awesome people. It's all It's all kind of high net worth. It's
Family
private
office
equity,
type.
but it's not institutional, right? It's not,
Yeah.
it's not kind of institutional private equity, but these guys took a chance. We found an asset, right? And these guys were looking to deploy capital, and we showed them the track record and what we'd done, and they were like, let's do it.
Interesting.
And we got the deal.
So you said the operators turned over the keys, but what was required to make it perform correctly? Was it just a bunch of work, or was it money?
Man, it was a lot of structural, like corporate structure stuff that we had to fix. Like the balance sheet was totally upside down, right? So it was a lot of settling old debts, right? It was basically taking the company private because being public is expensive. And then, just from an operational perspective, we brought in an engineer and a geologist, and we stabilized the asset because the production was doing this. Right.
Did you get that to smooth out? How'd you do that?
We smoothed it out. Yeah, just working one well over at a time. Right.
So
doing operations on the well. So now we're jumping out of minerals and we're jumping into kind of oil and gas operations.
Yeah, that's operating.
But the assets are when you think about mineral assets and operated assets. Obviously, with operated, just like with being a real estate operator, you're responsible for cleaning the toilets and, paying all the bills and,
right.
Having people on staff to be able to do all the administration.
Management.
Management and everything that goes with that, But the assets are valued virtually identical to mineral rights, right? So there's a lot of crossover there because it's, at the end of the day, it's one is a royalty stream that doesn't pay any expenses, and one is a production stream where you've got expenses involved. So there's a lot of, you'll find a lot of
That's
operators.
an operating business. The other one is just like a distribution model.
That's exactly right. Yeah, yeah. So we do, so in our operating business, like we have, all the lease operators work for us. The guys that run around in the field and gauge the tanks and fix stuff when it breaks. And we've got, a staff of accountants and, finance people and engineers. My engineers are actually here in San Antonio.
Oh, really?
Yeah, yeah.
Interesting. Wow.
Yeah.
It's so interesting to look into like this business for a little while and see all the mechanics. Spending some time in the energy business on the construction side, there's a lot of it I don't know, but there's familiarity. So it's fun to see this. Wow. If I'm right, you've done 100 million deals in 12 months?
No, $100 million of deals.
Oh, yeah. Okay, $100 million in deals. That's still a lot of millions of dollars in deals. Yeah. How many years is that over? How many transactions is this?
Yeah, golly. I mean, it's probably, that's in the last 12 months. And that's over, call it 30 transactions.
Wow, those are big transactions.
Yeah, some of them were large.
Did you have to capitalize these, or were you able to like trade them off without capitalizing them?
No, we capitalized the majority of them. Like on the mineral rights side, a lot of that we had a partner last year, basically that put up all the capital for the deals. And then on the operating side, we had the partners that I was telling you about.
So would these be assets you'd have to operate just for half a year while you own it before you get out of it?
No. I mean, like for the most part, these are assets that we'll own for 5 to 10 years.
Wow, that's a pretty good trajectory. So you believe in the location, you like what's left in production, and you say,
absolutely,
we got a fair enough price that we're gonna stick around.
Yeah, no, that's exactly right. I mean, the way that our business is capitalized is that it's not like a kind of traditional private equity structure where we're trying to get in and get out, right? Where we're trying to aggregate a bunch of properties and make them better and then sell them, 3 years down the road.
You understand what the cash flow?
Our investors want the cash flow. That's exactly right. So our entire business, and it's funny because I'm sure, at least one member of our board will listen to this podcast, but every time we get on a board call, they're like, "Where's the distribution check?"
Where's the money? Sounds like private equity guys.
Yeah. So I mean, but at the end of the day, that's an interesting, rather than kind of venture capital and kind of traditional energy private equity where they don't want any money back, for 3 or 5 years, and then they want to 3x their money or more, right? Our model is basically we buy. At least in the operating business, we're buying existing producing oil and gas assets, right, which are yield vehicles, right? So they're very well suited to high net worth folks that want to put money to work with us, knowing that they're going to get a cash on cash yield.
Got it. So what kind of cash on cash yield would those produce? Like the kind that you're saying, I'm willing to buy and manage because it makes sense for the work and the capital structure and all that. Like in real estate, 5 to 8% is the most common.
Yeah, 15 to 20% is what we target. Yeah.
Dude.
Yeah, which would pay
There's enough to go around.
They would pay the entire asset out. And that
5 years.
That gets back, exactly, in 5 years. And that gets back to, when we're thinking about, cap rates versus the discount rates that we use, right? So if we, oil and gas asset, well, we have to be selective about what we buy because we can't overpay for assets, right? In order for this model to work. But, and B, they already have to be generating cash flow. Like we can't go buy a bunch of assets that
you got to work.
Exactly. That we're going to plan to drill and we need a lot of drilling capital to do it. So it's a very specific strategy, but it works really great for kind of non-institutional high net worth folks that want to put dollars to work and that want to see a return on capital. Now, I mean, now oil and gas is by its nature, riskier, So, I mean,
everyone is so mesmerized by it because there's so much money. Anytime you think of someone who's been told the story about that rich guy or whatever, well, it's all oil and gas and they're just fucking filthy. It's not like they got a little money; they're filthy rich.
Yeah.
That's probably the exception up at the top, but
totally.
But still, when you talk about a 20% return, I look at that and say, "Sheesh, man, that's really good." So it's got to be a nice size of folks' portfolio that don't want to do the work but still want good returns. They don't want some 3%, 4% like income fund. This is real money.
Yeah, no, and what we do is we try to mitigate commodity price volatility.
Yeah, how do you do that? That's hard.
Well, you hedge. You basically have to use derivatives contracts. So we will, with our bank's help, right? We try to maintain, kind of hedges that roll. For example, we closed a deal 2 weeks ago, and it was a fairly large deal, and we hedged 2 years of our production. And what that allows us to do is to go out to market and basically forward sell our production, right? So that we're locking in a price out into the future, right? And so what that does, every oil and gas business has to do it, especially if you use leverage, because
you debt service in a bad time.
Bingo. I mean, you cannot use leverage in oil and gas and have just all this exposure to commodity price volatility, because that is a recipe for going bankrupt in a very, very quickly. So, yeah, I mean, we do that in order to stabilize our cash flows, right? In order to be able to generate, a consistent dividend that we can pay to folks.
Gosh, this sounds complicated. Now it sounds more complicated than real estate.
Yeah, no, I mean
that part of it sounds like it gets there.
That's like advanced. That's like oil and gas, 4,000 level class.
Okay,
but when we're thinking about going back to minerals, it's every deal that I do is not based on I think I can get 80-20 LTV from the bank, right? I'm gonna bring a bank in. I got to come up with a 20% down payment. Every mineral deal I do, I'm assuming that I'm gonna have to write a check for 100% of it. And that's another reason that oil and gas deals trade at higher discounts to real estate, right? Because it is harder to get financing. Right, the market is, especially for minerals.
That's one thing that's real estate has easy financing, and it just pushes the price like up crazy.
Totally, because every Tom, Dick, and Harry can get a loan, right?
Yeah.
Whereas with minerals, it's you got to have people that all of our returns are unlevered, and you got to have people that can write checks, right? Now, once you get to a certain size, you can go use leverage. But then again, you're going to want to hedge and lock in your, price.
That's a whole nother component of risk. Like we have deals where we use leverage. I like warehousing is a very simple commercial real estate model.
Yeah,
I like it because I'm a very simple person conceptually. If things get complicated, I start to zone out mostly. When it comes to warehouse, it's a simple building, it's a simple tenant, it's a simple lease. I love it. And I can find them and value them easy. It's just great.
Yep.
I'll tell you what. I do want to ask about. So we talked a little bit earlier, and you told me you had a course. everybody wants to know about minerals. You want to learn, and I don't know that, like, what do you need to go sign up for a college course about it? Like, I think you've got some interesting information. Would you tell me about that?
Yeah, heck yeah, man. Yeah, so we just launched, I guess it's been like 6 weeks. And basically, you know, I've been building following. And originally when I started making content, you know, it was really directed towards, you know, trying to establish trust with mineral owners, right? So we were trying to create a ton of value, you know, through YouTube and different social channels, because that just doesn't exist in the mineral space. Like, it's very backwater, right? And there are a lot of good companies out there, but there are just as many, you know, kind of, you know, fly-by-night companies, right? So that was really kind of the impetus for, you know, for Minerals Guy and, you know, creating the brand. And it's worked splendidly. Like, it's worked amazing. And I've built awesome relationships with mineral owners, and we do a lot of deals because people can find my content and they can say, hey, you know,
this is incredible. They can kind of like get to know you a little bit by listening.
That's exactly right. And that's the power of social media and video, whether you love it or hate it. So what happened though is we started to grow, you know, on channels like Facebook and TikTok, is I started getting all these inbounds of people that are just interested in mineral rights. And, you know, my wife told me, she's like, you got to make a course. You know, in fact, this was one of the first things that she said when I came up with Minerals Guy. She's like, you should eventually like develop a course to teach people about, you know, basically how to do what it is that you do. Huh. Right. So I finally, like, I put pen to paper, and it took me, it's funny because, like anything in life, I spent 6 months like kind of screwing around with a manuscript, and then I just ended up building the whole course in like, you know, 30 days.
Yeah.
Just, you know, putting it off. But basically the course, you know, the desire is to bring folks in, regardless of your background, regardless of what you do, but it's honestly really well suited for people that already do real estate, that already understand land and titles, is to teach people basically how to bring them in and teach them how to find, underwrite, and close mineral rights transactions.
So like from A to Z?
From A to Z.
Now, how many days does it take to learn all this?
Well, there's 14 modules in the course. Right.
And how long is each one?
Each course, each module is about an hour long. Right.
Okay, so a long weekend. So if I were to tune in and spend a whole weekend doing it, would I walk out of there knowing what the lingo is, having a general idea of like who to call, what to say, kind of where to go?
You would have a specific idea of where to focus, of how to find the data.
Is this live right now? Is it available right now?
It is.
How do people
Absolutely.
find it?
Yeah, go to learnminerals.com.
Learnminerals.com.
Yep, exactly.
Or Instagram, the Minerals Guy, and there's going to be something taking you there probably.
Yeah, exactly. Yeah. Instagram, you know, YouTube, TikTok, you know, the whole thing. We'll get you pointed in the right direction. But yeah, I mean, so the course is really broken up into 3 parts. And I was kind of telling you about this before we got started. But, you know, part 1 is really a deep dive on mineral rights, on property law, like what minerals are, how they're created, how they're transferred, you know, how we run title, how do we calculate things like net mineral acres and net royalty acres, which are kind of terms of art in our business that you have to know if you want to be able to participate. And we use terms like net mineral acres and net royalty acres because a lot of times there's fractional ownership of minerals. Just like there in your research on a piece of property, there might be 30 heirs that all are, you know, co-tenants of one piece of property, right? Because it's been passed down from generation to generation. So we use those terms to understand what a particular individual owns in a larger gross tract of land.
Gotcha.
Right.
So if it's 100 acres and this guy's got 1%, it'd be 1 net mineral acre.
Bingo. See, you're already doing it. You're ready to go. Now, yeah. So we teach people that, and we've got the calculators and like all these examples that kind of flow through the entire course. And then we talk about oil and gas leases and what royalty rates mean, and how that impacts value, where you've got, you know, let's say you've got a 1/8 lease from 1950 versus a modern, you know, oil and gas lease. Mm-hmm. Well, if you've got a tract with a 1/8 lease versus a 25% lease, which tract would you rather own? Right? You want to own the one with the 25% royalty because it's worth double of what the 1/8 tract is, right? So we walk through all that, and then we spend an entire module where we go through soup to nuts, like how oil and gas development works, right? So all the way from an idea in the mind of a geologist to putting the leases together, to drilling the wells, all the way through calculation of a decimal interest on a royalty check that's issued to a mineral owner.
Dude.
And then so that's part one, and that's really kind of the theory of mineral rights. And then after part one, we basically start taking action steps, right? Because the course is way less theoretical as it is practical, and so in part two, we jump into how do you mineral rights versus real estate. How do you build a list? How do you know where to focus? We talk a lot about that mineral development curve and understanding, kind of relative value differences between, different types of deals and different types of tracks. So, and then finally, we teach people, outreach strategies that we use, how to systematize outreach using a CRM. It sounds like we use the same exact CRM, which is kind of funny.
Oh, you Salesforce?
No.
Podio.
No, I'm using high level. Maybe that's what you're using for.
In our coaching program, we're using that.
Yeah.
But in the surface stuff, a couple of guys use Podio, one of them use Salesforce.
Got it.
Yeah, but on our coaching and education stuff.
Yeah. So we teach people how to systematize outreach and what we found effective. And then finally in part three, we teach people what to do after they've caught a tiger by the tail. How do they know how much to pay? So we spend a lot of time talking about mineral rights valuation. And then I built a calculator that people can use, to really understand, how to underwrite the deal. And then finally, we teach people how to get the deals under contract,
so
purchase
that's the next
agreement.
Thing I was gonna say. If you go through that part and find it, and someone says, "Gosh, I got this tiger, caught him by the tail. Now, what do I do?" I mean, if they call you, will you look at a deal and do it with them?
Yes. Yeah, I mean, and it's just it really depends on what your strategy is, because we've got people that want to invest their own capital that are in the program. And then we've got people that don't have a lot of upfront capital, right? Mm-hmm. And as I was telling you before, I mean, we do deals both ways, right? If the deal is right and I really like it, I'll do the deal myself. But, in a lot of cases, I'll end up basically finding a buyer and clipping the margin, right? Either in a commission or a carry, right? So we talk a lot about that. But for all the real estate folks out there, the transactions are virtually identical to real estate.
Okay.
From a paperwork perspective.
So what kind of contract would you use for?
A purchase agreement.
Oh.
Yeah, no, it's not. Now it's a different form purchase agreement.
Yeah, but it probably has a little bit different verbiage, but you have a lot of the similar things like legal address, buyer, seller, price, closing date, some terms.
Bingo. That's it. Yeah, so we get the deals under contract.
It sounds easy.
Yeah. I mean, the hardest part, like I said before, the hardest part of the minerals business is finding the deal, right? So if you can learn how to do that, and you can learn the various repositories of mineral, how to do the research and understand what's good and what's bad and relative value, right? And the types of deals you're looking for, which I can teach you how to do. And then you learn basically how to find the list, how to build a list, how to find mineral ownership at scale without having to go run title in the courthouse, then you're freaking off to the races.
That's when you could really start being productive without just every day, all night kind of stuff.
Yeah, that's right. I mean, because I'm sure, for your listeners out there, you've seen opportunities that maybe you're reviewing a chain for surface and you're like, holy crap, I think there's minerals here.
Yeah.
There could be some value, what we teach people how to do is to really get strategic about finding the deals rather than just walking into one, right?
If I were looking at this, I would say figure out how to search, and then you understand this. And if your day-to-day is surface like ours, we understood, another guy in the office understood. So he was combing through surface, saw a delinquent surface roll. He was going after the surface. I don't know how he figured out there were minerals attached to it and said, hold on, this is interesting. Dug, we started buying mineral interest, royalty interest from some folks. I don't know the total. I don't exactly know all the details right now, but we called a local oil and gas attorney and said, can you check our work? We're really not sure what we're doing. He says, yeah, you are sure what you're doing. You own this amount. So then we're like, well, how much is it worth?
Right.
So he goes and the Railroad Commission, some other website he pays, runs all this big ass fucking spreadsheet of math, and then says it's worth $12,000 a month or something. We're like, where's that money going? They said, I don't know. Some of it is getting paid to the wrong person. Some of it might be going into an impound account.
Yep.
So they're like, well, how do we get it? He says, well, you got the deeds. And I was like, we got the deeds. Are they recorded? Yes, they're recorded. Okay. So he puts it all together, sends a letter to Exxon and says, we'd like to get paid. We want to be in pay status, I think is what he said.
Yep, exactly.
And Exxon came back. And they ignored us, actually.
Oh, yeah. That's very common.
Yeah. We're like, what the heck, man?
Yeah. Yeah.
What's going on? So then we sent him a demand letter that says, pay attention to us or we're going to sue you.
Yep.
Then they came back and said, we don't think you have minerals, and here's why. And we responded and said, no. They said, you don't have them. And we came back and said, we do think we have them, and here's why. Here's our whole report and all that. Mm-hmm. And they didn't respond. And then we sent it again, they didn't respond. We sent it again, they didn't respond. We're like, what are we going to do? So the law firm said, I believe you should sue them. I'm like, little old me is going to sue Exxon?
Sue Exxon. Yeah.
And I was like, man, what's this going to cost me? Like $1 million? I mean, not for 10 grand a month.
Right.
Well, while we're looking through, we realize there's much more out there that can be bought that's also delinquent. So we say, okay, hold on. Let's not do this yet. Go buy as much as we can. So one of the guys goes on this tear of buying more and buying more and buying more. He's gotten, I think, about as much as he thinks he can now. And it's now a lot more than $12,000 a month, what he thinks. Now he goes back to the law firm and said, okay, I think we want to do it. How much do you think this is going to cost? And they didn't tell us a price. Like, it's hard. But what he said is, I'll do this for a 25% stake in this.
Deal.
Yeah. So I'm like, hold on a minute. I have no clue what this could cost. I don't even know what the probability is. I don't know shit. I know I can call some people and get some deeds and pay some money.
Yep.
We're in the thing for like 30 grand, I think. Mm-hmm. We paid them about 10 grand in research to like verify what we did. We spent maybe 20 on all this. Mm-hmm. And then they're going to do it contingently, 25%. We signed an agreement. This petition might be in Exxon's hands today or tomorrow, somewhere around there. So I think we're about to be off to the races.
Well, anytime you get an attorney to take a deal in contingency,
they feel really good about it.
They feel pretty good about it.
Because only personal injuries guys take it contingent. Otherwise, they don't touch.
Yeah.
So this made me feel good.
Yeah, no, that's right. I'll tell you, I've been in litigation with Exxon before.
How does this work? What's it like?
I mean, they're not going to give you an inch. I'll tell you that.
They got more lawyers than I got freaking staff total.
Yeah, they got a whole building of lawyers in Houston. But at the end of the day, I mean, like if you guys have a case, right? It may just take, it may take suing them to actually get them to look at it, because as soon as you guys sue them and they get served with that petition, someone will start to dig into the weeds.
And now we have subpoena power, because beforehand we just said, hey, prove to us why you think we don't have it. And they just didn't respond. Now we have subpoena power, and we can, in discovery, we can request those records and we get to look at them. Let's check ours against yours. This is where I think the power comes in.
Well, you need to pull the title. You need to ask them for the title opinion. Of course, that may be attorney-client privilege, but it would be interesting to Yeah. I mean, that's right. When you sue somebody, you get the subpoena power, and you can cause someone to show up and basically tell you why they decided to pay who they decided to pay. And it's funny.
I think that's another problem. Part of this is getting paid, we think, to the wrong person. We think it was bad research, and this is like 70-year-old.
That happens all the time. Now, I'm pretty sure every state has a statute of limitations on improper payment of royalties.
I think it's 4 years.
It may be 4 years in the state of Texas. It's 3 years in some states. It's 10 years in other states.
10, 12 grand a month for the first year. So that's roughly 120 grand a year times 4 years. That's $500,000.
Yeah, no doubt. Yeah, that's real money. Imagine if it went back 70 years.
Oh, gosh.
But yeah, I mean, there is stuff. I mean, look, at the end of the day, I do think that operators, they try to get it right.
Right, but everyone screws up. We screw up on buying surfaces. Yeah. I've been sued 4 times at this point over maybe 1,000 deals. We screwed up, and it was not bad. Of course, they're pleading, say fraud and all this bullshit. There's no intent. They can't prove it. They will never be able to. Yep. But we made a mistake. It's honest, and we come to the table and pay for it.
No, that's right. That's right. Yeah, and it could have been, some young 25-year-old attorney that was sitting in the dark room, under candlelight writing that opinion that just got it wrong.
6 o'clock on a Friday night, he's already had too much scotch and he fucked it all up.
Yeah, back in 1940, it could have been me, like 100 years ago.
I got a shot at it.
Yeah. So you never know, and there are, you definitely find mistakes, and we find that with mineral deals. Like for example, in North Louisiana, we found a number of deals where we buy something and then we'll go and do the title after the fact and realize that the owner was being paid improperly, for some period of time. Yeah.
So then you go back and request a correction, maybe.
Exactly. And at the end of the day, you might have to send a demand letter on some thick bond paper to get somebody to pay attention.
Yeah.
But there's definitely it is difficult. I mean, minerals. I mean, but at the end of the day, minerals are not. Like it's just different than real estate, right? I mean, we're not,
different beast.
It ain't right. It's not rocket science by any stretch, and anyone can learn how to do it. You just have to understand kind of the idiosyncrasies of it. But if you've got a real estate background, then you already understand how the deals are done, right? You just have to understand where to go, right? What's good, what's bad, where to find your list, and how much you can pay. And if you can do that, you can do deals.
It almost sounds, people come to me and say, well, I'm a pilot or whatever the heck, and I want to do this in my spare time. And I say, you can do it. I know people do it in their spare time, but I also know people that started in their spare time and started working and they abandoned everything else and did it. And those are usually people that are most successful because they can really devote time. Your craft can improve. You can build. Like when I listen to you talk, you understand the business model. You spent years developing it. Money's available, answers are available, and this is a going concern for you. That's where I think you do good. So, I ask myself, what do people that are listening to this say, or what are they thinking? And you never really know where your special place is. There are a lot of people that probably haven't you hit your stride. I ain't getting the energy business. I've hit my stride. Ain't no way that's changing. I just don't think. So if people haven't hit their stride yet, I would tell them to do what I was doing a long time ago. Try this, try that, try that.
Yep.
But I'll tell you, if you're going to go out there and try to build a landscaping company, well, your upside's limited. If you want to take a run at this and it works, you could be a super rich millionaire real quick for the rest of your life. So I like swinging at high multiple opportunities or high return.
That's right.
Eventually one of them's going to hit.
Yeah, no, that's it. And I will tell you, because we have had, it's funny because we've got a lot of people that have come into the course that work in energy, but maybe they work for an oil field service company or they work for a pipeline company.
Oh yeah.
And they're just they're working their W-2 and they're driving to downtown Houston and they're staring out the 55th, the window on the 55th floor.
And they're saying to themselves, there's something more.
There's something
just
more.
Just like you 2 years into that job, there's something more. Well, go get it.
Yeah, no, that's right. Yeah, because everybody, if you've got any sort of entrepreneurial streak, I cringe at somebody putting a ceiling on me and capping me. You know what I'm saying? It's I may spend my entire life. Sometimes I joke because I've got a buddy, one of my best friends that we went to law school together. He works, in a great firm, and my career has done this. And his is just done super steady. He's a partner now, and I do wonder, at the end of the day, when I'm 80 and he's 80, who's going to have more money in the bank?
Are you going to be on one of these or one of these when you hit that point?
Exactly.
You know what I'll tell you? I don't know what the answer to that is, but I'm going to tell you that you will be happy no matter where that lands because you got to go chase.
And for me and my personality, I need to have unlimited upside in what I'm doing.
Whether you hit that top or not.
Whether I hit the top or not.
You just got to know it's that carrot.
Yeah, that's exactly right. And some people have that itch that they feel like they need to scratch. And we have been helping some people that have W-2 jobs to scratch that itch and to have something in their life where they can have that unlimited upside, right?
Yeah.
I think that you as with anything, you got to hit your stride. You got to find the thing that you're super passionate about. I absolutely, love it or hate it. Sometimes I feel like I picked the hardest freaking way to earn a living that there is. But I think everybody feels that at different points in time.
That's true. I had a conversation earlier with a guy today where I told him I wrote a distribution check to myself for $1 million a year. And I remember 3 years ago taping that on the mirror of our old house. And when I got to the point, our company wouldn't produce that. Well, it would produce it, but we were retaining a lot of earnings, so we draw a couple $100,000 a year. That's what I'd live on.
Yep.
And I remember telling myself, when I'm at the point where my company can give me that every year as a draw because it doesn't need new capital, it's so stabilized, that's my goal. That's what I can get.
Totally.
We moved. God, this is the second time I've talked about this. I almost want to cry saying this. But we moved in a new house about a year ago, And I remember taking that check out of the drawer because it came off the mirror. And I was laughing because that was my Q1 draw. And I was like, holy shit, it's here. Their upside is so much higher than you think. And I don't know, will it be like that forever? I don't know. Maybe this is a good run. I'm not sure. But having that availability and you get to go chase that. You get to make your own decision. The American dream is people that came from all over the world to come to this new place.
That's it.
And this is a special breed of folk in the United States.
That's right.
So we get to do that.
Yeah. No, yeah. I mean, I love it. I love being able to, just like with you, when you found that minerals deal, it's like, if you work for somebody else.
Exciting.
If you work for somebody else, they might be like, don't spend time on that. But because you are in the position you're in, you're like, you encourage your guys. It's like, go chase that.
Let's do it.
Go find that.
Let's do it.
And sometimes I get shiny object syndrome, and I really just need to stay focused on the things that I make money doing.
Yeah.
But I also love the ability to see opportunities and to be able to chase them down. No matter what it is.
You get to scratch that itch.
Yeah, you scratch that itch. That's exactly right.
All right, I got one for you. Why are people told to never sell their mineral rights? And did they get that wrong?
Yeah, so that's the old saying, is never sell your mineral rights. And
Why?
That is really based out of, there's some, it doesn't cost you anything to keep those minerals, right? Unless you live in Texas.
Okay, yeah.
Right, and if you sell them, right, you could be giving up some, windfall or some fortune to
So it's
some
almost
other
like
person.
a lottery ticket analogy, like don't sell them because you never know one day.
Yeah, pretty much. I mean, but in back in the day, I mean, you had, kind of the example is the sleazy landman that shows up on Farmer John's doorstep.
Oh, what's the movie? Come on. That was a fun one. Dang it. Is it Daniel Day-Lewis?
Yeah. There Will Be Blood.
God, that was fun.
Yeah, There Will Be Blood. Great movie.
Yeah.
We got to talk about Landman here in a little bit. But, yeah, I mean, so there's the guy that shows up, right, and buys your minerals, right, because he's dealing with inside information, right?
Yeah.
And then the drilling rig shows up, and then Farmer John is screwed, and all his heirs
He got
are screwed.
ahead of that curve before the drill. He got before no one knew.
Yeah, exactly. So, I mean, that's really kind of what that never sell mindset is born out of. But the reality is that the market is way more liquid than it was back then, right? And we have a much firmer grasp of the resource in the ground and what it costs to extract it and what's going to get drilled and what's not going to get drilled and how much a well is going to produce, right? And what price we think we're going to be able to sell it for. Right, so there's just a lot more transactions that are happening, right? So comp analysis is possible.
Information is just available.
Yeah, information is just readily available. So people can, like, if you take your minerals to market and you call me, like, I'm going to give you a market price for your minerals, So that's really what I encourage folks is that if you own minerals in a good area, the other caveat that I would say is that if you own minerals in a good area, and let's say you own greater than 20 acres, right, you got a pretty freaking good idea of what they're worth.
Fair, okay.
Because you're getting, it is a competitive industry, right? And you're getting letters, you'll get mail blasts of people that are just sending out offers, right? So, that's pretty much that's pretty much what that means. And I spend basically a lot of time in my content trying to tell folks that doesn't exist anymore.
To sell them.
Yeah, exactly.
All right, so you taught a ton of folks how to buy and sell minerals. What would be the best deal a student of yours has done so far?
Oh, man. So we just launched 6 weeks ago, so skip that question.
Okay, that's fresh.
Yeah.
What's one mineral deal you'll never forget, and how much did you take?
Okay. So one mineral deal that I did, and how much was the take? So this is a good one, man. So we did a deal back in 2020 when the whole world was falling apart during COVID. And I got
volatility.
Yeah, volatility, right? And, love it or hate it, like there's money to be made in volatility.
I'm in the stock market like deep right now.
Yeah.
In the last 2 weeks, I've been like pushing the chips across.
Yeah. So the best deal that we did, I had a mentor that ran an oil and gas company, or he was the VP of land of an oil and gas company based out of Denver. And these guys just, crushed it. And they were in the DJ Basin, which is a shale basin in Colorado and southern Wyoming, before anybody. And they leased
first movers,
smoking
deals.
And sometimes I wish I would just been born like 10 years earlier. But these guys were they were there at the beginning, and they leased over 1 million acres in this play. And
how'd they pay for this?
Private equity. And so
what was their age?
So these guys are old dogs now.
Okay.
Yeah. So they're all retired, but they were in a position at the right place at the right time to just.
They knew what to look for. Their eyes and ears were open.
That's exactly right. And
that entrepreneurial spirit, they were not afraid to probably bet it all on red. Reputation, your money, your credit,
right.
Everything.
And they had reputation, so they were able to raise capital to go do this because it took a massive amount of capital to do it, right? So, I mean, think about it: a million acres of land. I don't know what they would have paid, but I'll just give you an example. Like in the Haynesville Shale back in the heyday when Aubrey McClendon and Chesapeake Energy were leasing, I mean, acreage was going for $25,000-$30,000 an acre.
Oh my gosh!
Yeah.
Now, that's real money.
In this area, these guys were not paying that. They probably got in between, call it $250 to a few $1,000 an acre. But still, multiply that times 1 million, that's a lot of jack. Right? So, but in every deal they did, it was in this one area. So when we think about oil and gas leases, the standard old school lease royalty was 1/8, right? So 12.5%. Now, what operators will do, or prospect generators, guys that are buying leases, a lot of times they'll carve out of those leases what are called overriding royalty interest. So you're a farmer, I buy a lease from you, and we agree to a 12.5% royalty. Well, I then sell that lease to someone else, and I carve out 7.5% for myself in an overriding royalty, and then I sell it to that guy, and that guy's got to pay 20%. That's what an overriding royalty is.
Got it. Your piece.
So they carved out these overriding royalties across thousands of leases, and they just put them in this little bucket, okay? And, Bill called me, in 2020 when the whole world was falling. I mean, I know I've said that 12 times, but the price of oil was like $30.
The oil falls. The whole oil falls a lot in the oil business.
Yeah. So Bill called me, and he's like, I have to sell this. He's like, we're at the end of our fund life. So they had this override vehicle that they had just put all these royalty interests in, and I was like, this is probably the worst time in the history of the oil and gas business to sell these properties. And he's like, we don't care. We've made enough money on everything else that we sold. This is the last piece of what we have. We're not going to extend the fund life another year. My directive is to sell it. So he called me, and we put that deal together, and we bought it from him. And after we bought that deal, of course,
recovery and boom happened.
Bingo.
Oh, God.
Yeah, prices.
So you didn't flip it, like you didn't have a buyer lined up ready to just flip out of it instantly.
No, I brought in a partner. Who's a dear friend of mine, and he bought it. And I think, it wasn't a massive area that we got it in, but I think we paid like $3 million for the deal, and over 120 wells were drilled on it inside of like 24 months. And we returned like almost a 4x to all of our investors inside of 4 years.
Wow. So investors are getting that kind of return. You're getting a heck of a return.
Yeah, it was good. It was a good deal.
That dollar amount isn't like the dollar amounts like you're thinking like tens, 20s of millions. $3 million. I can cobble some, you cobble some, he cobbles some. We can figure that out.
Yeah, totally. So it wasn't a huge deal because they had sold off. Like this was the last kind of vestige of what they owned, right? And they were just like they had made hundreds of millions of dollars on this deal.
Surrounding error.
It was a rounding error for them, and it was just an absolute home run for us.
So they needed all those in the beginning of their career. They've never done that. But it's just like as money grows, you get small returns because you're getting lazy. You don't give a shit anymore. That was them. Let's sell it to you. The guy who's younger and still willing to do the work gets to make the money on it.
Yeah, no, that was exactly it, man. It was a boondoggle, and we sold it last year. And it's funny because this can be our next topic. But I actually sold my piece, and I did a 1031 exchange into a multifamily property up in the mountains in Colorado.
Really?
Yeah.
So you can go across asset classes.
Yeah, you can.
I didn't know that.
Yeah, you can.
Wow.
Yeah, you absolutely
How
can.
are the apartments in Colorado doing?
Oh man, well. Let me tell you what. I came up with a budget for what I thought it was going to cost. So this was a duplex property that we bought, and really run down. You know, I got a screaming deal on it.
Mm-hmm.
And I was like, oh yeah, we're going to put $100,000 a pop in these, and then we'll set them up for Airbnb, and like, it'll be all good. Well, we're not spending $100,000 a pop. We're spending more than double what we thought we were going to spend, because everything's just expensive in Colorado, especially up in the mountains, but we're still going to we're going to do really good.
You bought it right then.
We bought it right. Yeah. We bought it so right that the builder that I brought the builder in, as he was like, "Can I do this deal with you?" He's like, "I'll put up the money and help us put the financing together." And I was like, "Yeah, come on."
Nice.
So now I got some of his skin in the game, and
so you're running that like a royalty deal now, and this guy does all the work, and you're waiting for the check.
well,
smart man.
We'll see. Yeah, he's an awesome. Yeah. So every once in a while, like, you meet people that, you know, like with your stuff, like, honestly, I see a lot of creators out there that are totally full of shit. You know what I'm saying? But I saw you.
The internet's a funny place.
Yeah. And I just started watching your videos, and I was like, this dude actually knows what he's doing. Like, he's legit. He's legit, you know? Like, he's actually, like, not only... You could tell people that just have a product they want to sell versus people that are actually operators in their business.
Doing it. Yeah.
Right? That are actually, like, their primary business is not being online or selling a product online. It's like, it's actually doing the thing that they proclaim that they're going to teach you how to do.
Mm-hmm.
And I saw that about you, and the same, like, with this builder. Now, he doesn't have a social media presence, but every once in a while you meet people in business that you're like, this guy is good, and he knows what he's doing, and he's honest. And so we kind of hitched our wagons together, and
that's cool.
It'll be a good deal. But yeah, I mean, going back to the 1031, so mineral rights are real estate. They're real property. Okay.
Okay. I didn't realize that. So, I guess it makes sense.
Yeah. If you think about
it's not the top, it's the bottom, or what's in the bottom.
That's exactly right. Yeah. I mean, so it's a real right. It's a right into a piece of land. Okay. So if you think about the whole bundle of property rights, you ever heard of the bundle of sticks analogy?
Mm-mm.
Right, so
you got air, this is water, surface.
Yeah. So the way that I was taught property law is that property ownership is like a bundle of sticks, right? So the bundle of sticks includes things like the right to fruits of the property, right? So it could be rents or it could be crops, right? It's the right to use and enjoyment, right? It's the right to abuse the property, right? So to mortgage or encumber the property or exclude people from the property, right? So each one of those legal rights all kind of formulates this bundle of property rights. Huh. And the mineral rights are one stick in the bundle, right? So when you think about minerals, they are real property, right? And so in the eyes of the IRS, right, they do not distinguish between mineral rights and surface rights. It's all the same. So there is you can absolutely do 1031 exchanges, and I actually did my first one. I used a group out of Midland that was my intermediary and did the whole deal. And you know, it's funny because I went under contract on the piece of real estate I was going to buy. I was like, you know what, I'm just going to get this under contract. And then I was
first ask questions later.
Yeah. And then I was like, I'm going to take my minerals to auction like 5 days later. And if I get the price that I want, then I'm just going to pull the ripcord, because I knew that there was going to be, you know, I knew that all the wells that could be drilled had been drilled, right? So we had basically, you know, all the upside was going to be gone, and it's basically just forecasting a stream of cash flow out into the future, right? Which you can do with a high level of certainty. And man, I'm freaking glad that I sold that stuff when I did. So timing is just like in real estate and everything.
You were
like
on the front end of that and the back end of that, you were good on timing.
Totally.
And I have to say this, and I'm not picking on you, but it's almost impossible to time the market.
It is.
I hit a big lick when I bought a bunch of land downtown San Antonio right before it went up, and people were like, "You're so smart." I'm like, dude, that was fucking luck. Yeah. And I was the dumbass who spent every nickel of his retirement dollars on piece of shit lots downtown San Antonio, and it hit. Like, pure luck. Market timing was perfect. Well, you did it right there too.
Yeah, and look, and it's not because I'm I'll tell you, I'll be the first to tell you, it ain't because I'm smarter than everybody else, because I'm not.
Nobody can time the market really.
No, you
not
can't.
really.
You can't. But and believe me, I could tell you stories too about how we didn't time the market correctly. Yeah. You know what I'm saying?
Those aren't as fun to talk about here. I got losses, man. It's all right.
Yeah. So I mean, but it's all about what my old partner used to say. It's like you gotta kind of hang out near the hoop. You know what I'm saying? And every once in a while, you hit a good one. So
well. Let's talk about Landman for a few minutes. You brought that up, and I was fascinated when I saw Billy Bob Thornton and his wife, and I was like, "This looks like fun."
Yeah. Well, I can tell you, it's been awesome for me because I'm really the only landman that's making content. So
yeah, I haven't seen anybody. When I saw yours, that's immediately I was like, I gotta follow this guy because I hear no one talking about it. I was really like, wow.
Yeah, no, and so it's like the timing was really serendipitous, and I love Taylor Sheridan. I love.
So let's go back up. There's a show called Landman. Where's it on? Prime?
It's on
Paramount.
No, it's on Paramount Plus.
Paramount Plus. Yeah. Billy Bob Thornton.
I don't know her name.
John Hamm.
Yeah, John Hamm's exec. He's the oil guy.
Billy Bob Thornton is like a burned out wildcatter who runs a company for a rich guy, John Hamm.
Yep.
There's a blonde gal and a blonde daughter. They look like they could be mom and daughter. They're both 10 and a halves. And it's based in Midland, I guess, sometime in the
Fort Worth,
past.
kind of, yeah.
Midland to Fort Worth area, office in Fort Worth, oilfield Midland. I mean, it's just
it's like the Yellowstone of the oil field.
Yeah.
It's probably the
it's fun. It's freaking fun, dude.
It is. I mean, it's TV. You know what I'm saying? It's funny because
but you relate to it. I spent time building in the oil field.
Yep.
And I relate to those man camps, those dusty roads, being out on those well sites, and it was a wreck, and I'm covered in dust. And
no, the scenery, Sheridan does an unbelievable job with just capturing the kind of the essence, right, of the oil field. Because if you go to West Texas, that is exactly what it is. It's scrubland and desert, and it's the world's best place for an oil field. Because it's just in the middle of nowhere.
It's a good way to put it.
But yeah, I mean, I love all the Sheridan stuff, all the Yellowstone series and Lioness, everything that he makes just touches the gold.
He killed it.
And I also love the fact that he's making a show about the oil business that isn't basically talking about how we're destroying the planet, that's not totally dogging the fact that we provide the energy that the world needs to survive.
Yeah,
right. Because
actually, Billy Bob Thornton says that a lot of times. If you don't have this, darling, you ain't got rubber on your tires. Get out of my face. He's telling the lawyer that comes in that way.
That's it. Yeah. So I mean, Billy Bob's character in the show is awesome, but that's not really what a landman does, right?
That's a couple episodes in. I was like, okay, landman was the tagline. He's an operator, basically.
Yeah. I mean, he's like a field superintendent. Is what he does. Yeah. I mean, because he's out.
But they call him like an exec or something. Or
or he could be like a VP of operations would be the equivalent. But typically, a VP of operations is going to be somebody with a petroleum engineering degree. And Billy Bob's is just Billy Bob in the show, but he's running an oil company and shit's exploding. So yeah, I mean, there's definitely kind of the Californication of what it is that we do. What a real landman does is
it ain't as sexy as what that show looks like.
No, I spend a lot of my day on the phone. A lot, and that is true because he spends a lot of time on the phone. But the only time that I go to the field is if we're looking at something to buy, right? Or I'm taking a camera crew because I want to film some content. Because I don't know jack shit about turning wrenches on a location. Now, I know enough about oil and gas operations because I've been around it so long, right? That I know a lot, but I'm not a wrench turner by any stretch, right?
Yeah. When I think of a landman, I think of an old courthouse with all the records that are in these big old books, and there's 20 guys piled in there all bumping around with their laptops.
That's it.
That's what I think of. Or like in our office where you don't even go down there anymore. You're just banging away, scanning through deeds, scanning through affidavits.
That's exactly right. Yeah, I mean, I've got an image of a Shreveport landman with, starched Wranglers and cowboy boots and a short sleeve shirt buttoned, tucked in, going to the courthouse to like peel through records.
That's it. 25-year-old dude making $200,000 a year out in the middle of freaking nowhere.
Yeah, exactly.
And he's like an ex-rodeo guy or something.
Yeah, exactly. Or someone. I mean, like honestly,
or a lawyer. There's a lot of that.
A lot of that. But it's also I talk to a lot of people. And my, it's funny because I wrote this in your questionnaire, but my superpower is relating to people regardless of where they're at in life and what their status is. And that's what a landman is good at doing. It doesn't matter if you're talking to a rancher.
You know what? That's the part. Okay, so let's talk about that for a minute. That's the part. First off, I agree with you. Your personality is very fun to be around. I like it.
Thank you.
But outside of when you're in the courthouse doing record searches on your computer, you're putting it together. But the other part of that in the field is knocking on doors, putting together contracts, making agreements, shaking hands.
That's it.
Babies.
That's exactly right. That's exactly right. I mean, that's it's probably half and half, right? And the way that we make money, and I tell all my students this, is that we can do research till the cows come home, but we don't make money doing research.
That's what I tell people. Get out land records and get on the phone.
Exactly.
You need to be in there, but if you ain't on the phone, that's where the magic is.
That's exactly right. So, and there is a magic to being able to, for example, like I went to Ohio and I brought my camera crew up there because we do a lot of deals in, kind of rural eastern Ohio in the Utica Shale. And we actually closed the mayor of the town of Cadiz, Ohio. We bought his minerals.
Wow.
And so,
that's cool.
Yeah. And so I've developed this relationship with him. And dude, we're getting like a deal a week from him because he's like, I trust Steven.
He knows everybody.
He knows everybody. So we went up there and it's all about developing. It's about developing relationships. It's about being able to really understand where people are at. Regardless of whether they're driving a truck or it's an executive, that works in Houston or whatever it is, and that's really that's what I do, is that I got to keep people on the phone. I need people to trust me, and so that's just what I've developed through time is just, reps of getting hung up on and reps of saying the wrong things. And really just trying to connect with people and try to figure out if there's a way for me to help them,
That's an important piece of this entrepreneurship thing. This is a bad analogy, but the Daniel Day-Lewis in the show we talked about earlier, he went out, he would talk to people, he would figure things out, he'd get in the middle of it. And there were people that didn't trust him. There were people that did trust him. I guess maybe that is a really bad analogy. But being out, that's that other sense. That's that other part of the component. You got the entrepreneurial spirit. You got the drive, all that stuff is there. But without being able to connect to the people, you're almost like, I don't know, man. You're like a horse without a jockey kind of in a way. You got to have that piece. And I think the people that have that, along with the others, they can do really well.
Oh, yeah. There's no question. I mean, there's no substitute for, knowing how to talk to people, like good in-person communication. But yeah, man. I mean, it's in people. You can make a lot of money in minerals. Like I know, several guys that have that are doing, multiple 7 figures a year turning minerals. Like that's
exciting. I don't care if you become a doctor or a lawyer. 0.001% of them can even go do that. Now, just professional degrees because that's like the highest paying college job you're going to get.
Yep.
Outside of that, in the entrepreneurial world, you can be a tech guy. You can be in real estate, minerals. I don't know, maybe the entertainment business, outside of sports. Other than that, I don't know what you can do to make that kind of money unless you're in very unique, weird stuff. Otherwise, it's this.
Yeah, no, that's right. Yeah. So, I mean, it absolutely can be done, and it's an absolute blast. And, if you get into it, you got to find your path, right? But, the other thing, like another plug for the course is like, there ain't no freaking way to get the information that I put together. Like you could search, and that's what I tell people, this is my pitch. It's like, you could search to the end of the internet, right? And you're not going to find the things that I have laid out here basically step by step because it is like an old boys club. And what I joke with my friends that are in the business is like, they're like, Steven, if you get all these people in this business.
I'm giving it away, boys. Giving it away.
I'm going to be the most hated man in the mineral space, but.
Well, you might be retired by then, so it may not matter.
Yeah, I mean, but honestly, like one of the coolest things about the course is the community component of it. And dude, I'm already doing deals with the guys that have come in.
That's exciting, yeah.
Which is super cool. I mean, and that's really like, that's the greatest thing about kind of sharing the knowledge and building this community component. Because my kind of grand vision for the course is like, I want to build a nationwide network of brokers that are doing the exact same thing that I'm doing, that I've already trained to do it, And so it's like,
you'll have your hand in this. You'll be building it. I believe absolutely you will do that after spending some time with you and getting to know you. But what is so fun to me is several guys have been on this podcast, or guys that have been through my coaching program.
Yep.
And I'm almost apprehensive to say this because you hear people say this and it seems like BS, but guys are like, Logan, this completely changed my life.
Yep.
And I went from the oil business, building pipelines, which is a good job, to something that's far different.
Yep.
It changed my life like I could have never, ever dreamed of. And I've got guys that come in here and rip a $30,000 check and go to a 4-month course, and they become a millionaire in the first year.
Yep.
And they're like, Logan, like, are you seeing this? I'm like, you right here with me, buddy? Like, yes.
Yeah.
So I think that's what you have the ability to do.
No, that's right. Yeah, and I do. Like I can't. I mean, granted, we just launched, and so
Dude, it ain't going to take long because you're first mover. No one has it. You know what you're doing. You're a good person, and you're working hard to get that message out.
Totally.
I think you got some fun stuff ahead.
Yeah, no, I'm excited. It's going to be. It is crazy because I feel like at certain times in your career, you do feel like everything is just an uphill battle, and it's just like it's really hard to see. Kind of. 4 or 5, 2 or 3 steps in front of you, and you just keep on trudging, man, and putting one foot in front of the other, with kind of, and eventually like stuff starts to kind of take hold, and it is really cool to see kind of it start to click. Like with this operating company, I mean, like, dude, that came out of nowhere, and I mean, we're doing $100 million in revenue this year.
You wanted that to happen. You knew something like that was going to happen, I believe.
Yep.
But you hadn't bumped into the right place at the right time, like we were talking about earlier, and you've done all the things to prepare. It just hadn't happened, but you crossed that street and they were right there at the corner. Keep trudging, man. There it goes.
Yeah, no, that's exactly right. So for anybody out there that's trudging through it, know that I feel
keep going.
I feel you. Don't stop. Keep going. And so.
All right, so let me ask you this: go to the Stephen 15 years ago, the Stephen that was leaving
the law firm
job. Yeah. That Stephen, how many years ago was that?
That was 11 years ago.
Dang, that's not long ago.
Yeah.
What do you got to tell that Stephen? What would you tell him?
Oh, just do it. Keep
going. You're on the right track.
I got no regrets, man. And don't get me wrong. Like I love, there's nothing wrong with law practice. Like it's a great way to earn a living.
Hell of a profession.
But I saw 65-year-old attorneys in the office that were billing 200 plus hours a year. And I was like, what the fuck is this? I mean, the reality is like, if you want to attain wealth, you need to own assets.
That's right. Yeah.
And not trade time for money.
That's right. You're right.
And I mean, like, I don't know. We'll see. I'm going to, and when I'm 80, like I'll stack hands with my buddy who's been practicing law, and we'll see how it turns out. But I can tell you, at least for me, right? I recognized that early on, and I looked for my first off ramp, right? And something that I knew I was super passionate about. I was like, I have to go try to do this, because if I can figure out a way to not have to trade time for money forever, like that is the off ramp.
I don't have my money on your buddy. I got it on you.
Yeah.
We're about out of time, I do.
Yeah.
Folks want to get a hold of you. They want to learn about some minerals. Heck, just reach out. That's all right. Just
reach out to me.
Man, how do they find you?
Yeah. So if you want to find out about the course, go to learnminerals.com. So that's super simple.
We're going to get that link from you and put it in the
comment. Yeah, absolutely. And then check out my YouTube channel. So it's at Minerals Guy. I've got all the at Minerals Guy handles across all the social media things. That's the first thing I did.
Good one.
Right. So YouTube, Instagram, TikTok, Facebook. And then if you want to get in touch with me, you can shoot me an email at steven@mineralsguy.com.
Sweet. Well, our time's about done. Thanks so much. I enjoyed this. It's one of the fun ones of the day.
Yeah, heck yeah.
My commitment to you is to deliver the most interesting, messy, and profitable real estate deals on earth. And in exchange for that, I only ask that you subscribe to this podcast and share it with a friend who can benefit.